It's going to be okay. You have to get started somehow. You don't have to wait until you've cleaned up something or like
Mhm.
honestly, the best thing to do once you can decide that you want to afford it or that you can afford it is just to get somebody in there to start helping you because really the messes, they never clean themselves up. Somebody that knows what they're doing has to get in there to help kind of right the ship.
Welcome to the Designer's Oasis podcast. I'm your host, Kate Bendewald. If you're tired of one-size-fits-all advice to running your interior design business, you're in the right place. Join me each week as we dive into topics to help you run a thriving interior design business without the hustle. We'll talk about the business of design, but also mindset and mental health, because I know when you thrive, so will your life and business. It wasn't that long ago that I stepped away from my corporate interior design job to build my own design business so that I could realize my own creative dreams, have more time with the people I love, and serve my clients at the highest level while making more money than I ever could have working for someone else. It wasn't always easy, and I made my share of mistakes along the way. Fast forward to today, and I've learned a thing or two. Since then, I've built multiple six-figure interior design businesses on authentic word-of-mouth referrals with many repeat clients. And I want to share it all with you, the ambitious, inspired, and I get it, occasionally overwhelmed interior designer who shares this dream of transforming lives through the art of interior design. You can do this. Thank you for letting me spend part of this day with you. Let's get to it. My guest today is Morgan Boudreaux of Business by the Book, a full-service accounting firm that works directly with interior designers across the country, helping them take the stress, confusion, and worry out of financial-related tasks off your to-do list. Business by the Books is started as a family-run business founded by Morgan's mother, Sherry Wilson. Today, they have a team of bookkeepers who are passionate about taking care of financial tasks so that their clients can do the things that they love: design, create, and build successful businesses and spending time with their families. Business by the Books has been my personal and trusted bookkeeper for 4 years. And having previously worked with two other accountants, I know firsthand the difference it makes to have a trusted team who understands your finances and who speaks clearly and is dedicated to your understanding of your business finances. Please welcome my guest, Morgan Boudreaux. Hi, Morgan. How are you?
I'm great. Hi, Kate. Thanks for having me. It's always a pleasure to join you and all of your listeners and members of Designer Oasis. So thanks for having me.
Yes, I'm so glad to have you back. And we do have had Morgan here before, so we'll be sure to link to your previous podcast episode in the show notes. But today we are going to talk about three of the top mistakes that you see interior designers making, that you think would be just very simple changes to make in your business, but that can make a really big difference. So I'm really excited to get into this. I know when it comes to talking about your business and finances, and specifically the field of interior design, there's so many topics that we could cover. This is Financial Literacy Month, so we thought it was really important to bring you back to talk about this subject. But today, we're really wanting to kind of hit on some of those almost like quick fixes. Like, what are these like all these little tweaks and things that you can do in your business that can help you make some big changes? But before we get started, I want to just kind of do a little bit of bookkeeping 101 for our listeners that might be just getting started. And I'll just say for the record, I've been doing this a long time and I'm still a little unclear on these things that I'm about to ask you. So whether you're just getting started or whether you're a veteran, I hope that today's episode proves to be meaningful and helpful for you. So, the first question I want to have you sort of explain to our listeners are some fundamental differences between some of their financial reports. You've said time and again, understanding your financial reports is just fundamental to a successful business. And so two of those reports that we're most likely to be looking at are your profit and loss statement and your income statement. So can you please help our listeners just very high level understand what is the difference between those two and why would you maybe want to look at one versus the other, those kind of things?
Right. So the you have your balance sheet and then your profit and loss or your income statement. And so the profit and loss statement or the income statement is I think the one that people tend to look at the most. We like to send it year to date by month. And so you're seeing your income come in, your cost of goods sold, and then all your expenses listed in the categories or at different accounts that you have. Um, Office supplies, rent, payroll costs, those sorts of things. And so that one is really helpful for seeing, in a specific time period, how much income is coming in and how much is going out and what is your profit at the end of the day. And so that one is really great for cash flow management strategies, for making sure that your expenses are in line with your revenue and that you're not overspending on certain areas. It's a great way to double check and make sure that your subscription fees are not getting out of control or that you don't have personal Amazon also on there and those sorts of things. The balance sheet is the more complicated financial report that your accountant or bookkeeper should be sending you at least quarterly, if not monthly. But that report evolves and grows with your business throughout the life of your business. And so that's going to list all of your checking accounts, all of your savings accounts, any liabilities like your sales tax liability, any loans that you have. Your credit card is also a liability. So it's broken into three sections: assets, liabilities, and equity. And so that gives your CPA and you a snapshot of the health of your business in its entirety. So it's year over year. It only gets more complicated the longer you've been in business. It rarely gets less complicated. And so those two reports you should be looking at least quarterly, but we would definitely recommend that you're reviewing those monthly, in order to stay on top of and to learn what's going on. Because the more that you look at those reports, the more familiar you are going to be with those.
Got it. Okay. So your profit and loss is really looking at sort of a snapshot in time of where things stand, let's say for this month or for this quarter. Whereas your balance sheet is really looking at the health history of the financial history of your business year over year, or however you choose to break it down. Is that, am I oversimplifying it?
Well, so the balance sheet, it always will have a date on it, like balance sheet as of April 9th. That's
Mhm,
today.
mhm.
And so it'll list the balances in all your accounts. So how much cash is in your checking account and in your savings account, what is your liabilities? And so it's giving you a picture of the health of your business as of whatever date, but it lists the accounts as a whole versus the details of what type of spending you're doing.
Got it. Wonderful. That makes so much sense. And I know I often hear designers, they get these reports and I send them to you because I'm like, I don't actually know the difference. I just know that we get them and we go over them. Um, and of course, I'm mostly looking at our P&L on a monthly basis, but we definitely get our balance sheet each month and review those. But I know that I've been looking at ours lately because we've been in the middle of tax season, and that's when I tend to personally pay the most attention to those, for better or worse. Do as I say, not as I do in this case. But I really appreciate one of the things that you and your team do so well, I think, is really breaking down and explaining what are these different terminologies and best practices in a super clear way. And that was not my experience previously with a past bookkeeper who was well-meaning, but really overcomplicated things. And so I just want to say to anybody listening that if you're working with a bookkeeper and you aren't pretty clear on what everything is, you might consider working with a different bookkeeper, because there's just a communication style that you guys have that I find is very approachable and very refreshing in my eyes.
Well, thank you. We are always trying to add, value to an educational opportunities. Like we've added videos that explain the financial reports that are coming out with each of our clients now, because it is hard to understand. And so just having somebody walk through the high points is such an important piece of everything. So
Yeah,
thanks.
well, you guys do that really, really well. Okay, the other question that I hear most often when someone's just learning how to understand their bookkeeping is the difference between cash and accrual and reporting. So, can you help us understand the difference between those two?
Yeah, absolutely. Okay. So cash versus accrual are different ways that your income and your expenses, the time, the difference in the timing that they're recognized. Okay. So with cash, we're thinking on a cash-based accounting system, you're thinking about it like when the money has actually left or entered your bank account is when it's going to be recognized on your financial reports. So this is really the easiest way to think about this is when you are purchasing something. So if you place a custom order and that purchase order goes out, if you're on cash, you're not going to see that cost of goods sold expense show up until they charge your card, which could be at shipping or on delivery or whatever the case may be. If your accrual, as soon as that PO goes out, that's where the month that the expense is going to be recognized. And so the flip side of that is the income side. So if you are invoicing on a cash basis, it's when the client pays the invoice. And if you're on accrual, it's when you send the invoice. And so if they pay the invoice in May, even though you sent the invoice today in April, the difference of what month the income is going to be recognized varies based off cash or accrual. And where this has the most impact is, at the end of the year, obviously, when you're going to file your taxes, if you've sent a lot of invoices in your accrual in December, but maybe you haven't placed the orders yet, then you are going to see the discrepancy between your income will be elevated and you won't have the offsetting cost of goods sold expenses yet. Or at tax season, it matters. And then it also really, really matters with sales tax. That is the day-to-day impact of this is with your sales tax. Some states make you file sales tax on an accrual basis, no matter what way you file your year-end taxes. And so it's really important that you understand what the rules are with your sales tax responsibilities in your state, in the state in which you do business, which could be your client's state.
Got it. So as it relates to taxes, you really need to look at what your state requirements are for your sales tax to know what and then do you find that most of them do the same one, but there's a few outliers? Are they like, or is it just kind of all over the place?
I think with sales tax, I feel like everything is all over the place. It
Sure.
really it depends on what state you're in. Um, the and yeah,
Yeah.
I just think I'll just leave it at that.
Yeah. No, that makes sense. Right. Because you can, so what let me make sure I'm understanding this correctly. So let's say you have prepared an invoice for product for a client. Excuse me. Um, not for product. We're going to say for services, because I would actually probably be sending a retainer if I was collecting money for product. But let's say in this case, I'm sending an invoice for services at the end of the year in December. And let's say I send it December 15th. So if I'm on accrual basis, it's going to hit my books when I send the invoice.
Right.
But if I'm on a cash basis, it's going to reflect that money on my income statement when the client pays it. So if they pay it after the first of the year, the next year, then that income becomes income for 2024 instead of 2023.
Right.
Got it.
Exactly.
Okay.
And so
Okay.
there are, if you are working with a great accountant, they can help you by saying, okay, if this client isn't going, we can turn it back, say, let's turn it back into a proposal if they're not going to pay it. And then because proposals are not accounting documents. And so it's almost like a draft invoice. And so
Mhm.
there are things that you can do if this is going to make a significant impact to kind of make sure that everything is lined up correctly, and and why it's really important that what all the rules are.
Right. And see, and I didn't realize that your sales tax location. So if I'm working on multiple projects, right? And let's say I'm working on a project out of state, I could be filing sales taxes in a different location on a cash basis and then another one on an accrual basis in another state. All right. I didn't know that, but I think that's really important to understand. Yeah. So this is a story that I've told on this podcast before, but I'll share it again because it's relevant to what we're talking about. Prior to working with you guys, I was not taught the importance of, as you mentioned earlier, sending clients either proposals or retainers to collect money for product. Instead, what I was doing was I was sending invoices. And so there was a year where I had wrapped up a client presentation in December, and the client approved a whole bunch of product, which we then sent an invoice for, and they paid prior to the holiday break. So I received all this money for product in December of whatever year it was. And so that money was then reflected as income for that year, taxable income on my income tax return. And so that year, the next year, I had to pay income tax on all of that money that was actually not income for me, but it was, well, a small portion of it was, but most of it was earmarked for product. So then fast forward in January, when we went back to start purchasing all of those said items, then it really threw our bookkeeping out of whack. Because then starting in January, we looked poor. We had it looked
Right.
like we had no money. But really it's because I didn't have it set up correctly. I wasn't sending I was sending invoices instead of a proposal or a retainer to collect that money, and it really threw off my income reporting. And so that's one of those, I think, big takeaways for me when I hear you talking about this, that especially looking at that end of year accounting, that if you've got it set up correctly, like I do now, thanks to your help, that you can really time things so that you're accurately paying the right amount of sales tax, right amount of income tax, and everything is categorized really the way that it's supposed to be. And that's just such an important part of knowing your numbers and knowing where things stand.
Yeah, and I think it's just so important that entrepreneurs know these details. And so it's so easy to think that this doesn't really matter, that it's not important. Somebody else is going to take care of it, which can be partly true. It can be somebody's responsibility, but it is important that you know enough so that you are being mindful of these things when they're happening, because at the end of the day, it is you that is sending the invoice versus a proposal, or not collecting a retainer. And sometimes we can backtrack and clean it up, but sometimes if you take the cash and it's in your bank account, that is what it is. So
Mhm. That makes a lot of sense.
mhm.
Well, so you actually, this is a nice segue because I understand what you and I've talked privately before, and I know that there are a lot of designers who are just getting started who come to me, at least, and they say, I feel like my bookkeeping's a mess, but I can't afford a bookkeeper. That's like this mentality or mindset that I hear so often. Um, w- do you have that same experience? Do you see people coming when first of all, it's never too late. Anybody listening, like, it's never too late. Um, but what are the reasons that you hear when people come to you and they sort of are like, uh, got their tail between their legs and they're like, here's my bookkeeping, I need help. What is keeping them from getting help sooner? What are they telling you?
Yeah, I think that sharing your finances with somebody who you've had a couple of conversations with is such a vulnerable place to be in. It
Mhm.
is like opening up your underwear drawer and asking for people to just walk around your house. And
Yeah.
so we definitely understand that there can be a lot of embarrassment, shame. You just don't even know what you don't know. And so to that, we just have to say, like, we have seen it all.
Mhm.
You there, we have worked with hundreds of different clients over the course of this. We've been in business for over 10 years. And so it's been a journey, and that you're not the only one, and everybody has to start somewhere. And so I
Mhm.
think just
Mhm.
kind of a mindset shift with the embarrassment of it is the
Mhm.
first step. We also work with a lot of clients, and so the work is the same, but nobody can remember anything. It's just at some point it is just transactional, and it's like going to the doctor. Like, they're
Mhm.
just doing what they do, and it's not personal when it comes to your actual numbers.
Mhm. Mhm.
So it's going to be okay. You have to get started somehow. You don't have to wait until you've cleaned up something, or, like,
Mhm.
honestly, the best thing to do once you can decide that you want to afford it or that you can afford it is just to get somebody in there to start helping you,
Mhm.
because really the messes never clean themselves up. Somebody that knows what they're doing has to get in there to help kind of right the ship. And some people are able to take back, cleaned up books and can manage it on their own more than likely. Once you offload this
Mhm. Mhm.
piece, you don't ever
Mhm.
want to take it back.
Right. I'll vouch
But
for that.
yeah, so but it's never too late, and it's not going to get, generally, unless you are an accounting brained person.
Sure.
It's just not. You think you're going to get it under control, but the best thing to do is just to get somebody involved right away.
Yeah, absolutely. And I do think that there's also this mindset shift that would be important to not only recognize that this isn't personal, like this is just these are just numbers, this is business, right?
Right.
Um, but that this is an investment and not just an expense, right? It's an investment in your time because now you're not having to spin your wheels trying to figure out something that's not in your wheelhouse where you could be spending that time working on business development or getting new clients or updating your website to better reflect your brand. There are so many things that are more in your wheelhouse that are better ways to spend your time. And if you can focus your energy on that, sure, maybe in the early days, paying for a bookkeeper is going to be um, a little bit more uh, of a higher cost to your cost of doing business, but over time, it's the relevant or sorry, the relativity to how much you're making, it's not gonna feel like such an impact, but it's such a smart way to get started with your
Right,
business.
exactly. And I think that a lot of people think that it's just categorizing transactions and reconciling your bank account,
Oh,
but
yeah.
it is way more than that. It's
Sure.
making sure that your invoices are going out on time and prompting you to follow up on this lingering invoice, or helping you keep your purchase orders managed, and making sure that you've invoiced for the extra freight or shipping that comes in after the fact. And at the end of the day, you know, nobody wants to pay more taxes than they have to. And having your finances organized and done right when your CPA is ready and asks for them, you're going to get the biggest tax deduction possible, which nobody wants to pay more than they have to. So,
Yeah,
um,
absolutely. Absolutely. I love that. Okay. Well, let's get into the top 3 mistakes that you see designers making in their bookkeeping. And what do you recommend that they stop or start right away? So, what's the first one that you've got for us?
Yeah, so these are things that you can definitely do without hiring a bookkeeper. So these are
Mhm.
some low-hanging fruit that's going to clean things up and make your life just so much easier from a financial perspective. So the
Mhm.
first one is to stop using P2P apps. So that's person to person, like Venmo and Cash App. I feel like a broken record saying this. Like we tell all of our clients, like this is such bad news. Um, Most of the time, people are using their personal Venmo account and they've just linked their business account to it. And so, right off the bat, that's violating these companies' acceptable use policies. You're supposed to have a business account if you're going to do it for business, which
Right.
most people don't really do. But other than that, it just is so messy because
Mhm.
you take a $10,000 payment from your client, and so that's sitting in your Venmo. Then you pay your babysitter with that money that's sitting in your Venmo account. And then you go to drinks with your girlfriend and you reimburse her for the check. And all of these just have emojis as the subject. And then you deposit $9,000, let's say for math's sake. And then we're saying, well, you don't have a $9,000 invoice for this client. You have a $10,000 invoice. And so then you're sending your bookkeeper screenshots of your Venmo account with a bunch of martinis as the subject for it. And I'm like, what is that? What do you want
Yeah.
me to do with that? So it just
Yeah.
is really, really messy. And so the best way to do it is, if you use design files or House Pro, you can have them pay directly ACH or credit card there. You can send them a QuickBooks invoice if you want to, if you're dealing with transaction fee avoidance, there are other ways around it, but Venmo and Cash App are messy and that's not the right way to do it.
Got it. Now that makes sense when it comes to collecting payments. I've had vendors in the past, let's say, um, like the receiving or the delivery guys to tip them if I forget cash. Or if I've had, I don't know, we've just had like random small vendors, people that were maybe not using all the time who will ask to be paid through Zelle or PayPal or one of those. Does it seems to stand that that would to reason that that would still be true for those same kind of transactions, in which case I get out my old-fashioned checkbook and I write them a check, but it sure would be easier if I could use an app. Um, if I'm using PayPal, you're nodding, so you would agree? Is that
PayPal
the same?
is the better of the three, Cash App, Venmo,
Okay.
PayPal. PayPal is, linkable in QuickBooks. It is better, people do use Venmo in those situations for sure, where they're tipping their installer or
Right.
or paying vendors for that matter. I think that the my concern there is that it becomes so digital and there's not a lot like, did you get an invoice? Where's the receipt for this?
Mhm.
Have you collected a completed W-9 so that we can file a 1099 for this? We live in a digital age, but business is still not that digital. And so I think that if you're really organized, then you definitely can still use those when you're paying people, although I would limit it as much as possible.
Sure. Got it. That makes sense. Okay. All right. So stop using P2P services such as Venmo, Cash App, and that sort of thing. All right. What about number two?
Number two is to stop commingling your business and personal expenses. And so
Get your
this
Netflix
one,
and your Nordstrom off your
yes,
credit card.
exactly.
I've heard
Yes,
this before.
yes. So this is especially with our new clients or our growing clients. This
Mhm.
is the way that they start to do that's where the way that they start to pay themselves is
Mhm.
that they just are like, well, I I'm not taking a salary yet. And so I'm just going to go shopping and I'm going to put this on this, or I'm going to use my business Amazon account, but I'm going to buy diapers and I just have it sent to my house. Well, I hold on a second. When you're buying Amazon stuff, we don't always know what that is. So then we have to ask you questions. What did you buy? We can't just assume that it's office supplies or styling goods or whatever else you buy at Amazon. And then it part of the way, like the legal creation of your business when you start an LLC or an S corp or all these things, is that you're separating your personal and your business, and there's legal protection there. But when everything is all mixed up, it's called piercing the corporate veil. And if there was ever to be an audit on your business, if there's a lot of personal in there, they're going to say, well, how do I know that there's not business in your personal as well? And it's going to open you up to a personal audit. So there's a lot more than just it's annoying for your accountant to have to follow up with you all the time.
Yeah.
But it eliminates the protections that working like underneath a business entity provides. And so it's really, really important. It also is way better for you to just pay yourself with like a check or a bank transfer, even if it's small, even if you start with like $500 a month and you're transferring it out. That's also how you can prove that you're taking an income if you ever were to want to buy a house or buy a car. If you just have a list of Netflix and Nordstrom, the bank does not recognize that as income.
Yeah, it gives you that protection as well.
Hey designer, you work so hard on your business, making sure that your website is flawless, your Instagram is swoon-worthy, and your brand is on point. The problem is you're still facing a balance sheet that is less than inspiring. If you want a thriving interior design business that affords you a great salary without the burnout, listen up. Just breaking even isn't an option. Not only does it lead to overwhelm, stress, and sleepless nights, but it's a major drain on your creativity. If you're tired of just breaking even, if you're tired of missing out on opportunities because the money just isn't in the bank, and if you're ready to unlock the secrets of profitable interior designers, head over to designersoasis.com/habits to get my latest guide, The 7 Habits of Highly Profitable Interior Designers. Inside, you'll uncover what you really need to focus on to take you from barely making it to boundless possibilities. Abundance is yours for the taking. Download my guide that will help set you on the right track to upgrade your interior design business. Head over to designersoasis.com/habits and download yours today.
Yeah, the way that I started to do this was because I do have one Amazon account. Well, it's actually not true, but one that I use. And but you can easily keep a business credit card tied to that account just as well as your personal. And you know that you can switch that payment selection at the transaction moment. And
Right.
we've gone even a step further, which I guess would be a little bit more of an advanced bookkeeping strategy, but super simple. But that's to have we have separate credit cards for business operations transactions versus client payments. So we have one credit card and the nice thing is we get cash back on these credit card purchases. So even if we have the money in the bank, we're not going to use a debit card. We're going to use a credit card and we're going to get that cash back or whatever sort of bonuses you get with your credit card. And of course, we pay them off each month. But one credit card is for OpEx. So that's all of our subscriptions. That's all of our office supplies, that's paying for High Point, and then the other card is exclusively used for client transactions. So all of that purchasing. So our bookkeeper knows typically that if there's an Amazon transaction, Amazon's really the only place we buy office supplies, and it's on X credit card, the OpEx credit card, she knows that that's what that's for, and she knows if it's on the other one, she can very quickly assign that as a cost of goods sold. And that has been really helpful to even further allocate the money. So that way we can look at and then we have separate checking accounts too. One for,
Right.
and this is loosely based on the book Profit First, but I'm not going
Right.
to get into that right now. But one checking account is for our operating expenses, and that all of the money that we receive for services, right? So a client pays us for our time, for a proposal, for services. The money goes into that account. And we use that to run the business and to pay ourselves. And we use the OpEx credit card associated with that gets paid each month out of that checking account. And so it's like a siloed, and then we've got a separate checking account for our client purchasing, and we call that a trust account. And
Right.
all of the um, money that our clients give us to pay for product goes directly into that account, which is nice because then you can visually see how much money do I have to run the business, how much money is in the trust account, and then you can look at the related credit cards and sort of make sure that everything's matching up and not out of whack. But that was even like the next step of getting a separate account. It helps us mentally avoid the mental gymnastics of trying to figure out, if you put it all into one pot, well, how much of that is ours to operate from, and how much of that is still
Right.
left over for client Z who we're halfway through purchasing for. So that's been a real helpful
Yeah,
thing
that's
for us.
That's great, Kate. You get an A+ for that. That is so organized, and it really helps. It helps you understand where your money is going to go in the future, and so that you don't, just like what you were saying, so you don't spend the money that they paid you for their furniture
Right.
on, marketing expenses, and it
Sure.
really keeps things very streamlined. So that's a great tip.
Yeah. Well, it's been very helpful for me to, my little tiny brain can understand it better. And I will say we do have a separate savings account for taxes, and that's where we try to do it every time we get paid, moving over a certain percentage to that account that we use for taxes so that that money's also not sitting in there. Now, keep in mind, we do that for income tax. Sales tax
Right.
stays in our cost of goods
Yeah.
account.
That's pretty common, especially if you're a monthly sales tax filer, because it just turns over um, so quickly. But if you are a quarterly or an annual sales tax filer, that is another strategy that we, recommend to our clients, is that if it, especially if it's annually, it would be a great strategy to move that sales tax liability, those dollars out, so you don't spend your sales tax that you're holding on to.
Yeah, I know. It happens very quickly. All of a sudden, you're 3 months in and you're like, "Oh, I actually haven't put aside any money for my sales tax for my income tax."
Right.
And it has to be a part of the habits that you build in your business. Okay. So,
Absolutely.
number 2 was
Yes.
to stop using credit cards for personal transactions, and then if you wanna take it even a step further, you can further organize your business, money so that you're super clear on what's for running the business and what is for managing your clients' purchasing. All right. And so, what is the third top mistake that you see designers make that you really would love to see them do to help improve their business?
Yeah, the last thing is just to make sure that you're updating your project management system in real time. So that's your design files, your House Pro, MyDomo, whatever one it is that you like to use. If they're paying ACH or credit card through the program, it's getting marked as paid. But if they're writing you a check or sending you a wire or paying you through Venmo, that is not getting marked. You have to go in there and manually record those payments. And so that is important, because otherwise, what we see on the bank side is that you've gotten this deposit. Sometimes it matches up great and we can
Mhm, mhm.
easily connect the dots, but sometimes it's not as that easy. And so we don't know what where this money is coming from. And so, it's your responsibility to record that on the invoices or the proposals, or retainers. The more complicated piece is the purchasing side. And so a lot of times, you go online, you have a purchase order, you go online, you make the payment, you place the order, and then you mark the purchase order as paid with whatever amount it was on the purchase order. Well, then the item ships, or half the order ships, or it all is, yeah, I don't know. I can't, they
There's
all
so
have,
many scenarios that
yes,
can throw off what was originally put in the purchase order to what ultimately how it ended up shaking out. I'm sure you've seen it all. But yes, it's
yes,
frustrating because you can make a purchase order for a certain amount and then like I know one for example is sometimes a vendor will charge us 50% right away, and then it like this is typically happens with custom upholstery, but then they'll charge the other 50% when it ships.
right.
Or sometimes the freight changes because they're doing real-time freight charges versus a flat percentage. So how do you manage that piece?
Yeah. So we definitely recommend that you have an orders ad or purchasing ad or some sort of separate email address that you set up for all of your receipts or order confirmations that they go to that,
Mhm.
and that somebody's responsibility is to mine that email and make updates to your project management system. So that can be, you, if you're a solopreneur, or that could be somebody on your team, it could be your bookkeeper. But
Mhm.
somebody needs to be managing that inbox and updating the purchase orders in the project management system, tracking if you had a 50% payment go through, posting that only 50% of that has been paid, because it's important that the other 50% is showing on your unpaid bills report so that you know what else you owe. Because if you don't update it at all, then it looks like you have already, that you owe the whole thing when you've already actually paid half of it. But if you
Right.
mark that you've paid the whole thing, then you're not budgeting that you actually still have money that needs to come out of your account.
Got it. Yeah.
Um, and, updating, it seems silly, especially when we're talking like, 20, $50 with the freight, but sometimes it's way more than that. And updating the, the discrepancy, the changes from the
Mhm.
estimated freight or shipping to the actual. But those, it's like those little amounts will eat into your profit margin so, so much. And so it is
Mhm.
important that you are keeping up with that, so that when you're reflecting on your project's profitability, that you have an idea, not an idea, but you have like the actual numbers of how much money you made on that project. And if you're not capturing the changes on your purchase orders, um, then you're missing a whole piece. And so it's not just the big furniture orders, but it's making sure that you are also adding in when you're styling,
Mhm. Mhm.
or your project expenses when you're doing an install, when you buy picture hanging kits or
Mhm.
lemons for the kitchen, like all of those things need to be reflected, because that all, eats into your profit margin.
I love that specific example. It shows me, Morgan, that you know the interior design industry so well because you've seen it all. Yeah, and I would say like our business is pretty good about purchase orders. Because not every vendor requires them. In fact, most these days don't require them, but they're still important to create. And you guys really helped us to understand this because um, it's it's doing a lot of things, but one of the things I love the most about it is it helps us to see how much profit we made on the purchasing side because you can very quickly see, well, how much did they pay you and how much did you spend on your cost of goods sold? And the difference really is your profit on that project. And so if you don't have those purchase orders accurately reflecting what you actually spent, then that number can be out of whack for better or worse, right?
Right.
Um,
Right.
and when you see, okay, when you know that you know that you know that your purchase orders are buttoned up, then I can look and I can see, wow, we made $20,000 on this project in purchasing, and that was very good. And then we use that to pay ourselves bonuses quarterly or annually. But if you don't have that information or you don't have it accurately reflected, you don't know whether it's 20,000 or $0 or whether
Right.
you were in the red because you screwed something up. So I really have come to understand the benefit of the purchase orders. Now, one thing that I am legitimately asking for myself, but I know it will help somebody here, is you have, speaking of updating your project management system in real time, and you talk about purchase orders and payments and invoices. So the workflow that you have taught us that has worked really beautifully for the last couple of years for us is that when it's time to accept payment for products from your client, we now create a retainer, and that retainer becomes a liability, right?
Right.
Correct me if
Yep.
I'm wrong. Liability on your books. And then we use the purchase orders to go ahead and make, so the client already has approved a proposal for the amount. So that's how we know what to send for the retainer. So
Right.
then fast forward, and we are in the purchasing phase. We've put together our purchase orders, and things are starting to arrive. Now, that proposal and retainer are still sitting on our books. I'm unclear at what point, and I know people do it at different stages. At what point do you convert the proposal to an invoice that you think is the best practice?
Yeah. So people have there are differing opinions on this. Some people do it like on install. That feels late to me. I think that it's on, I would prefer to see it. I think our clients from a in and out standpoint like to see it when you place the order because technically it's theirs. They've already paid for it.
Mhm.
And so whether or not it's coming to your warehouse or well, I guess if it's going directly to their house, it's theirs. So it needs to be invoiced because it no longer belongs to you. It's not those dollars are not a liability anymore.
Mhm.
Um, which I guess is the thought behind the doing it upon install. But I think regardless of if it's sitting in your warehouse or not, they've paid for it, it's theirs. So once the item has been bought, that is
Right.
when I like to convert them to invoices. And then if you're looking at your P&L month to month, you see the income and the expense in the same month. And so that
Sure.
helps things
Stay more balanced.
right. So
Well,
it's not like you're not like, oh my gosh, my March was so bad. Why am I in the red in March when there's money in my bank? Well, it's because like your client paid all, you waited until March to buy all this stuff, but your client paid for it in January. And so things are a little bit more in line with each other.
got it. Yeah, that makes sense because you can all of a sudden for us it's so often been at the end of the year, we convert proposals to invoices and then all of a sudden we have all this extra income and you've got to make sure that you've got savings set aside for your income tax for that inflection. That makes sense in theory, and I see why there's differing ideas on when to do this. That makes sense to me to have things reflected in the same month. Logistically, though, it gets a little challenging because and you're nodding, so I know you understand this. 99% of the time when something ships, it's not a problem and we get it, and even if there's something damaged, we still handle it, and, like, we have a no returns policy, so it's almost never gonna be an issue. Even if something does arrive damaged, we just get it replaced or repaired and move on. But ever so often, there's something where an item goes out of stock, it is
Right.
discontinued, or maybe it arrives and your client is like, there's just something legitimately wrong. You missed the mark and you have a responsibility to return it. Like, there's that. In which case, you wouldn't want to have turned that into an invoice anyway. The other reason why it feels hard to do it midstream is because our proposals are typically organized by either room or product type. Like, here's your furnishings proposal, or lighting, or plumbing, or kitchen, or bedroom, or whatever, versus one big, massive proposal.
Oh yeah.
And those products on those proposals are all shipping at different times.
Right.
And so historically, we've done it at install, converted those to invoices because that's when we know everything's kind of good to go. So, how do you kind of address that challenge of having of organizing your proposals so that you can invoice all at once? Is there a
Yeah.
good answer to
So
that?
this is where it is so specific to each business and
Sure.
how organized they are.
Mhm.
I definitely am of the school of thought that the smaller the proposals, like the least, grouping it by like living room lighting and
Uh-huh.
putting that on a proposal, living room furnishings, living room wallpaper,
Mhm.
because it is so much easier to make adjustments to things if the
Yeah.
document is smaller, the
Sure.
least amount of things on there as possible. But your client, and this is also where taking a retainer is so important, because then the
Yeah.
client is just like initialing or accepting all of the different proposals or just approving the room board as a whole. But
Yep.
you're the one, or your bookkeeper is the one that's actually applying the retainer across all of these different places,
Got it.
because
That makes so much sense.
the client doesn't want to, they're like, oh my God, why am I having to pay 500? That's
Proposal.
yeah, like gross exaggeration, but you
Yeah.
kind of know what I mean. I also think that sometimes, like if we have a really disorganized client, our like, and I don't mean that in a bad way, but some people, this is just so hard,
Yeah, sure.
we say, do not like get an approval on a proposal, but you need to immediately collect payment on the invoice, because accepting payments on proposals is so messy. And if they don't want to do retainers, their client doesn't want to pay them like these big lump sums, then accepting payments on proposals is the worst thing that you can do if you cannot remember to convert them to invoices and all of that sort of thing. And so, because proposals do not show up on your P&L. So if you have payments on proposals, then when you look at your income statement, you have no money on there.
Yeah. Got it. Okay, so that makes so much sense and it's super clear. I'm going to repeat it just to make sure I'm clear and that our listeners are clear, because we're throwing around a lot of jargon here.
Yeah.
So what I'm understanding is this, that we want to make our proposals as small as possible, because it'll be easier to convert them to invoices. So instead of sending your clients as they arrive, so instead of sending your clients proposals with the ability to pay on the proposals, the better practice would be to go ahead and calculate all of your proposals and figure out what that number is. We tend to round it to the nearest dollar just to give our clients kind of a neat and simple proposal. And we always let them know we'll settle up at the end if there's a difference, but this is to cover these proposals that you've approved. So then we create this retainer, we send it to them, they pay one retainer, or maybe down the line there's some changes and we add and there's future, but generally speaking, there's one retainer. Then we have these approved proposals and we can use those to do all of our purchasing. And as items ship, once everything on that proposal has shipped, we can take that money from the retainer and apply it to the convert the proposal to the invoice and then pay that invoice using the money in the retainer. And so we can
Right.
sort of do it bit by bit rather than waiting for the very end. And this is going to do two things I'm hearing is one, it's got the money is appearing on your account as a liability through the retainer. But then as you convert those proposals to invoices and you get paid for them, now it's starting to show up as income
Right.
over time. Okay. That makes so much sense, and I'm really glad that we talked about that today.
Yeah. 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 Absolutely. Thanks for bringing it up.
Yeah. And now I know that different softwares use different language. I know I used Ivy or House Pro forever and they call it proposals, but I think in design files they call it quotes.
Okay.
But it's the same thing, right? We're
Yes.
talking about the same thing. Okay.
Yes.
Wonderful.
Yep.
I can't speak to
And in
any other
QuickBooks, it's called a proposal. And so that's my language. So yeah.
Yeah. Okay. Well, I thought that was important to mention because that's a new thing
Yes.
that
Thank
I
you.
just figured out. We're testing out design files, which I like so far, but it was like, well, wait, how do I create a proposal? And I just realized that they were using a different terminology. So I hope that clarifies it. This has been super helpful. I just want to give a huge shout out to Business by the Book. You guys are fantastic. I highly recommend anybody who either if you're working with a bookkeeper, but you just don't have a good way of communicating or you're unhappy, or if you're not working with a bookkeeper, the best time to start working with one is yesterday. So you guys are available for, I believe, do you guys do a discovery call for new clients? How do you work if somebody wants to work?
Yeah,
with
yeah,
you? How
yeah.
do they do
So
that?
we have a discovery call, and that is sort of like a free consultation. You get to know us, we get to know you. And then if you are interested in moving forward, then you share your QuickBooks with us. If you have one, and that is a paid assessment. It's $250 for us to do like a dive underneath the hood and see what's going on. When was the last time your banks were reconciled? What's your average transaction volume? That sort of thing. What does your business setup look like? And we use the findings from that to sort of diagnose what our recommendations are and develop a proposal for you. And then we would, share a proposal with you. And so we are currently taking on new clients. Our next opening starts in May. Yeah, we currently work with about 150 clients, and 85% of those are interior designers. And so we really do feel like we understand the industry. We've been working with mostly interior designers from the very beginning, so almost 10 years. And we have great relationships with the people at Design Files and at House Pro, and that feels like a really important relationship that we're continuing to develop because we get to advocate for our clients with those softwares, because the ease of use on that is what makes everybody's life better. So
I couldn't agree with that more. Well, if you guys call them, make sure you mention Designers Wasted
yes,
podcast. That's
please.
where you guys heard us. And again, and I love that, right? You guys listening, it's just like the way we would work. We're going to have a discovery call. We're going to do a paid consultation. And from that, we're going to put together a proposal. So it's really straightforward. And I think that deep dive under the hood look, even if that's all somebody does, right? It's going to
Right.
give them, I think, clarity and
Yes.
understanding about what to do next or where to go from here. And then they can ultimately decide. So to me, that feels like a no-brainer that somebody should take advantage of that right away.
Yeah. Great.
Cool. Thank you. And then please tell us
Okay.
your website, and we'll be sure to link
Yes.
to everything in the show notes.
Yes. So our website is businessbythebook.money. Kate's going to put it on the link, and there's a contact page with, you can either book a consultation directly with our client services coordinator, or you can fill out the form and we'll contact you. So
perfect. Thank you so much, Morgan. This has been super helpful.
Kate.
I appreciate it.
It's always great. Thanks for having me. I'll talk to you later.
Talk soon. Bye-bye.
Hey friend, thank you so much for letting me spend a part of this day with you. I'm so passionate about helping designers like you, and I believe in a rising tide, that when one of us does well, we all do better. So if you share this attitude of abundance with me, I want you to do just one little thing. Please share this episode with someone you think might love it. And if you're feeling extra generous today, go ahead and take just 30 seconds to open your podcast app and leave us a 5-star rating and review. It's free for you to do, and it helps me to be able to keep making more episodes and resources for you. However you choose to help, please know I appreciate you so very much. Thank you, my friend. Have a wonderful rest of your day. I'll see you soon.